Right, together we are going to tackle the last section of the chapter. Am I connected? Yes. All right. If you look at where we've been in this chapter, we talked about debits and credits, that it doesn't necessarily mean plus minus. It matters more where you're on the big side of the T. Every account has a debit and credit side though. In the last few days, we talked about how we journal and then post to the ledger. You also learned that accounts actually have numbers, 100s, 200s, 300s, 400s, 500s, and that posting's kind of putsy. A lot of page flipping. What I'm going to show you today then is what's called the trial balance. After we've posted, we make sure our debits and credits equal. And that's achievable through what's called a trial balance. It proves the mathematical equality of the debits and credits as we've journal posted to the ledger. Notice that the trial balance happens after posting. So we've journalized, we've posted, then we can make the trial balance. It is listed, meaning the trial balance, is listed in order of the general ledger. So it would start with assets, then it would roll right into liabilities, followed by owner's equity, revenue, and then finally expenses. So it's in that order. When will an accountant or when will a financial department create a trial balance? At the end of a fiscal period. Now, fiscal periods might be monthly, they might be quarterly, they might be annually. Our book tends to do them all monthly. In the real world, they're probably quarterly, meaning 1, 2, 3 months go by, that's 1 quarter. Another 3 months go by, that's quarter 2, 3, and 4. Here's what it looks like. I had thought this was in your notes. I apologize that it's not. This is what a trial balance looks like. It's just, again, a listing in order of assets, liabilities, owner's equity, revenue, and expenses. There they are. Why do we see some things on the debit and some things on the credit side? What does that mean? It's where their normal balances are. So what's up with drawing and these expenses popping up over under debit? They're the naughty accounts. And it's just a quick stop to make sure debits equal credits. Another question, where are we pulling these numbers from? They're pulled, the numbers are pulled from the general ledger. After what? After we've posted. That's it. So let's do brief exercise 2.9 together. Brief exercise 2.9 together. Looks like we're on page 81 in the book. Top of page 80, no, that's not right. Oh yeah, it is. Brief exercise 2.9. From the ledger balances given below, prepare a trial balance for this particular company at the end of June. List the accounts in order shown on page 73 of the text. All account balances are normal. So they jumble them all up, and we should put them in the proper order. Okay? Where would these balances have been pulled from? The ledger. Where would the ledger have gotten the balances from? All the debit, credit, debit, credit, debit, credit work from the journal. Okay? So, what do you think is going to be listed first, knowing what you know? Why cash? It's the most what asset? It's the most liquid asset. So you're simply just going to list, do you have this top part there? Do you have debit and credit there? Okay, so this is where the normal balances reside. Cash, 5,800. Let's talk about dollar signs for a minute. You've noticed in the accounting world that dollar signs are always listed in the first number and then everything else kind of just follows that dollar sign. I'm really okay with you not putting dollar signs in. If you want it there, you can. So this is saying, okay, after we've journal chronologically through the month, and then we've posted all of that, the cash balance is $5,800. What do you think is going to be next? A what? AR. We own AR. So they're just saying, here's a jumbled list of all the accounts and their balances. Looks like we only have one more asset, and it's equipment. Why do you think equipment is under AR from a liquidity standpoint? It's hard to turn that equipment into cash. Whereas I could go knock, 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 customer, please pay my bill. Could you sell the equipment if you had to, though? Yeah. Do you think it'd be worth as much as you paid for it? That's for another chapter. It's called accumulated depreciation. Does that wrap up our assets? Okay, so what's our next type of account? Liabilities. How many do we have? Do we have notes payable too? Okay. Why did we put that $9,000 balance under credit? It's on the other side of what? A big LOT, and it's got a normal credit balance. It doesn't appear we have any other payables. What's our next account? Owner, well, we're under the owner's equity world, but it's called owner's capital. It's also a credit-based account, so its $15,000 balance will be on that in that right column. What's another owner's equity account that's naughty? So it's going to be owner's drawing. Where are we going to put the number, though? Under the debit side. Naughty. It is naughty because it's normally a credit balance. But if we'd credit on owner's drawing, it would make the owner's worth go up, and that's not true, so we have to flop it onto its other side to make the worth go down. So if I had to put numbers, what would these three be? 100s, 200s, these two are 300s. What's our next account that we need to add? Revenue, and it looks like it's called service revenue. Thank you, Kenzie. It's got a $10,000 credit balance. Will we ever see debits in there? No. Service revenue means we must be cutting hair or dental work or something. We're providing a service, and that's our money-making piece. That would have been a 400. Or if a large company, it'd be 4,000. How many expenses do we have? 2. Let's see how they list them. They're not alphabetical. Am I going to care if you flip these two around? No. What? Why are they debits? I thought these are under the owner's equity realm. They are naughty. They do not play by the credit rules. They decrease the owner's worth instead of increase it. Was a trial balance pretty easy? Yeah. Normally you're not going to be presented the format that you're looking at. Normally you'd be presented with something like this. And you'd go pull, this is a totally different exercise, but you'd pull these final balances from the ledger to create something like this. That's the normal layout. What do you think's happening on the next line? What's the purpose of a trial balance? Find the total to make sure what equals what? Debits equal credits. You got it. And then we see some ruling again. Single and double ruling. I'd be cool if the word total was here. Either way. Single ruling implies there's math above. Double ruling implies that the math is complete. Pretty easy. What would make this not equal? If you accidentally, then you're right, if you accidentally put something in the wrong column. Okay. Would you like to try one on your own? Do you have another trial balance right below it, brief exercise 210? Okay. Let me look at brief exercise 210 a minute. I have mine crossed off, so I don't want you to do that. I want you to use that little template. I actually want you to do it to 4. So use exercise, brief exercise 210 in your workbook. Like use that little template, but actually go to your textbook page 82 and do it to 4. So I'm at the top of page 82. The following accounts are taken from the ledger of Rec-A Company in December. Notes payable, owner's equity, equipment, owner's drawing. Do you see them? They want you to put them in a trial balance good form. The cool part is you know what order to put them in. Why? How do you know what order to put them in? The account numbers are there. Thank you. So I want you to just try this by yourself. Even though it's not brief exercise 210, you're going to use that form of your workbook. And I will show you answers in just a minute, and we can go through it. So here are the answers for the do it to 4 trial balance. Looks like we have 4 assets. Payable, payable, payable. 3 liabilities. We have owner's capital that follows credit rules, but then you have owner's drawing that doesn't. It's got a debit balance. Pop back to the credit for the service revenue of $88,000 and then expense back on the debit side. 150,000 equals 150,000. We are, this is very exciting, we are 2 days ahead of schedule. So we will be able to do problem A tomorrow and Friday. What I like about problem A is we journalize, post, and make a trial balance all in one. So you see the full process instead of this little snippet, snippet, snippet. That also allows you to not have homework over the weekend because you can do, that's where the cheering really starts to happen. You guys are cheering in your body language. The cheering begins because then you'll have in-class time to do the B sets next week. Now, it's not going to be this little spoon-feeding guiding business on my part, but you'll just have time devoted to working on B problems. Your test will be Friday, October 12th. It is far away. A week and a half. So thank you.